Are you ready to outperform the S&P 500? In today's video, we're going to be breaking down two ETFs which are estimated to really crush and beat out that S&P 500 in 2025. The two that we're going to be looking at is the Vanguard Communication Services ETF as well as the Vanguard Healthcare ETF. Want to break these down systematically, showing you exactly how they are. Now, when we think of January, it is historically an incredible month for the stock market, and of course, the S&P 500 index only advanced 2.7% in January, despite having the treasury yields. We know that we're really keeping the rates the same. We know all of the tariffs are coming out, interest rates, but honestly, these two have performed exceptionally well. And even over the past year, we'll see they have done very well. Now, when we start looking at these, the first one is the Vanguard Communication Services ETF. The ticker symbol on this is VOX. Returned 7.3% in January. So when you think of bigger picture, you're talking almost 3x what we've seen in that S&P 500. Now the Vanguard Healthcare ETF, or VHT, returned 6.7% in January and looking and really poised to be super productive within 2025 with these ETFs. Now, when you start looking at these, they are reporting above average sales and above average growth for 2025 so far. In other words, analysts are expecting stronger financial results from these companies within here. And of course, these are going to be big names that you know. When we get into the communication services, it tracks 117 companies focused on social media, streaming entertainment, wireless, and communication services. The index includes a bunch of value stocks as well as growth stocks. So you're getting a lot from the sector itself, making sure you have a little bit of diversity. Now, when we start looking at the names within this ETF itself, you're talking Alphabet, Meta, Netflix, Walt Disney's in here, AT&T, Verizon, T-Mobile, Electronic Arts. All of the big names that we know within the S&P 500 are broken into the communication portion of this ETF. So when you think of the broader index and that S&P 500, you're investing into all of these sectors. This is almost taking apart and putting just the communication sector into an ETF itself. Now, when we look at the past year, it has advanced at 37% during the past year, outperforming and outpacing the S&P 500 at 26%. And of course, when you think about this, it is believed that it is going to continue to outperform in 2025 because communication companies and projects are giving very strong financial results and they're starting to put a lot more money back into the infrastructure. Now, when you start looking at the S&P 500, they think revenue growth is going to be around 5.8% this year and earnings growth around 14%. But when you start looking at the technology companies, they're looking roughly 8% on that revenue growth. And of course, looking at earnings growth of around 15.2%. Now, of course, these are all forecasts, guys. You have to take it with a grain of salt. You have to really do your research because these are estimated forecasts essentially out of analysts that think that these are going to outperform and looking for different sectors that are going to outperform the broader market. Now, that makes the current sector level valuation about 24 times over the earning, which of course is very reasonable for the sector. Now, when we start looking at the Vanguard Communication ETF, expense ratio of 0.1, so a little bit higher than we see traditional with the S&P 500, but looking at $1 for every 1,000 invested, it's pretty good. And even looking at an average expense ratio of very similar funds is a 0.85, so very close and very on par. Then we get into the Vanguard Healthcare ETF. Now, this tracks 416 US companies which are in the healthcare sector. Again, thinking about the larger picture of this S&P 500, you are breaking out the healthcare sector in its own ETF. Now, they fall into one of two categories. The first one is companies that manufacture healthcare equipment or provide healthcare services. The second part of this is your pharmaceuticals and your biotech research companies. So you are getting everything with this healthcare ETF. That is really both sides, not only the manufacturing and the production side of it, but also the pharmaceutical and the biotechnical side, which of course could make a really big difference for this ETF's growth. Now, when we start looking at the companies within here, Eli Lilly, United Health Group, Johnson & Johnson, Merck is in there, Pfizer, all of the big names, again, you are going to see represented in here. And looking over the last year, only returned 7%. So in 2024, definitely well behind the 26% return that we've seen in the S&P 500. But a lot of people are saying within the sector itself, there are lower valuations, which would provide a really big opportunity with very strong, long-driven term drivers. So if this is an ETF that you're looking to pick up, you could actually see it grow over the next couple years and really just kind of balloon. Now, when again we start thinking of the S&P 500, reported sales 5.8%, earning growth around 14.8. This is where the healthcare forecast is coming in 6.2%. So definitely doing a little bit over the sales that we're seeing of those S&P 500 companies. Earnings and growth of 21%. When you think of the differentiator there, you're looking at 15% versus just over 20%. So definitely within the sector itself going to be advancing a lot faster. That makes the current valuation of the sector 31 times the earning, which again looks very reasonable. This one has the exact same expense ratio, a 0.1, meaning it is $1 for every $1,000 that you have invested. And of course, very similar funds of this nature is right at that 1%. So should you invest in these guys? Honestly, for me personally, I do choose to go the S&P 500 route. And I know a lot of people, even though it seems like this is going to be a lot more of a value play, more of the companies that are well established, not seeing, such a heavy focus in the tech side, where we know there are a lot of these ETFs that are super focused on technology, that are focused on AI and quantum computing, a lot of that nature. This kind of pulls it away a little bit, getting into the communication. So again, when you start thinking of like Verizon and AT&T, it is more about the communication services that they offer, which is the reason why it gives you a really good blend of your value stocks and your growth stocks, instead of doing something like the QQQ, which of course is Invesco, that is going to be just focused on really those large tech companies and the growth we're going to see in the future. And of course, healthcare is not going anywhere. When we think of healthcare in the United States, when it comes to pharmaceutical, when it comes to biotech research, there is always going to be a growing, and whatever the next breakthrough is going to be, if it's going to be a weight loss drug from Eli Lilly, if it's going to be, something to quit smoking cold turkey, there are always going to be breakthroughs that we're going to see, meaning this sector within the ETF is always going to be growing. So again, me personally, I like looking at the broader index and I break it into the S&P 500. But if you are looking to get a little bit more specialized in some of these ETFs, it's very cool to see the companies that they make up, their performance that we're seeing within the different sectors within that S&P 500. And honestly, when it comes to investing, there are so many ways that you can split it. If you're just a, really like me, just a basic investor, going in for the S&P 500, I do the QQQM, and then of course the VOO from Vanguard, very basic, followed up with the SCHD for my 3 ETF portfolio. And of course, recently we have added some exposure to Bitcoin, around 5% in there. So that way we do have some exposure to the Bitcoin ETFs as well. And of course, it's been doing incredibly well. Now, I don't think the Bitcoin ETFs are going to really shoot up that high. I feel like a lot of things are kind of up in the wind, thinking of MicroStrategy, thinking of everything that President Trump is looking at right now. It's going to be interesting. And at 2025, honestly, most people, most analysts, most resources that you look at are talking about going a lot more into the value of the companies themselves versus seeing a lot of huge growth out of tech companies like we've seen with Nvidia, that we've seen with Alphabet and Google and all of these companies, or excuse me, Alphabet is Google, but looking at Alphabet and Meta and a couple other companies, seems like we're not going to see as much of a big growth from the tech side coming into 2025. And of course, coming off the last 2 years of double-digit growth, historically, this year is a down year, usually a negative year when you come off 2 years of double-digit growth. But overall, keep investing, guys. When the S&P 500, when these companies start losing valuation, you're buying them at a discounted rate. This is the reason why I focus so hard on dollar cost averaging, putting money into the market the entire time. And I would love for 2025 to be a year where we see a down year, 5, 10, 15% reduction. It would give me the ability to buy a lot more of it during the entire year. And then of course, when it does come back, and historically it has always come back, we will see a really big increase there. All right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.